Welcome to the Trader's Edge. I am Jim Euro. Why? How can I screw
Take
that up?
two.
It's take two. Click. Welcome to the Trader's Edge. I'm Jim Euro. That's Bobby Iaccino. Bobby, this is a special moment for me because right now I'm combining two of my favorite things in the world. Because Brant's, my restaurant, Eat Up, Drink Down, and hold on, let me show you the back, has come out with a new tight black T-shirt line.
Oh, nice.
Specifically designed for Italian Americans.
You got to send me one of those. You got an extra small?
I want to send you an extra small, which, by the way, I've told you the greatest Brant's story of all time, right?
Yeah.
We hired a waitress and she was in the clothing room and said,
tell it again because we get different viewers all the time.
The best line I've ever heard. We hired her from another bar and she had a following in town. She was a great bartender, but she also had a terrific figure and she knew how to play that. And there was a time she started with us and we're up in the closed room and someone says, "What do you think?" She goes, "Oh, the medium fits perfectly. I'll take the small." And I thought it was the greatest line I've ever heard. I thought it was fantastic. But anyway, I forgot to mention that we are 2/3 of the team at unfilteredinvestor.com. And one of my favorite shows that we do is to bring on the third member, our technical analyst. Bobby, do you want to say anything about him before we bring him on?
Yeah, really, Mike is the backbone of what we do. Jim writes really good macro stuff and he gets you ready for the next week. I run my models and select the stocks we're going to look at. But Mike always has veto power on stocks that we're looking at. So when you get those recommendations, they've come out of my models, Mike's research, and then Mike's vetting. And we end up with really good situations there. I'll just give you a quick example. I know it was almost a month ago, but the last week of June, the S&P was down, I think it was down 0.72%. Don't quote me on these exact dates. Might have been the second last week of June. And the NASDAQ was down like 1.09%. And we got stopped out of Nike and we took full profits on Target and full profits on XLV, the healthcare ETF. That's because these are the kind of sort of market themes that we look for. It's clear outperformance because we're not just staring at the stocks that you might already own. We're not just saying, okay, here's what we're going to do in NVIDIA. Here's what we're going to do in Micron. Here's what we're going to do in Tesla. It's looking at a wide variety of stocks and coming up with things that other people might not be seeing and might not be looking at. Not saying that they wouldn't see it if they looked at the shit. They just don't.
And I'll add some of that too before we bring Mike on, is that I talked to Mike about his technical analysis stuff on air on different shows for about a year before all of a sudden it clicked, because it's hard to understand what he's talking about all the time. And then all of a sudden it clicks. It's like, wow, this is good. So that's one of the reasons of this is for you people. I lobbied the two of them to let me come in and, provide some macro stuff too. And hopefully, I have my own little technical analysis that's mildly different, but I don't use that in the newsletter. But I love having access to Mike Arnold and Bob Iaccino's technical analysis. It has been life-changing for me. I rode that XLV thing up to the top, and I didn't even cover. I just covered it with options when it got there, and I still have upside because I want to be invested in that. But anyway, without further ado, let's bring in the chief technical strategist of unfilteredinvestor.com and of Path Trading Partners. Sorry if I got that backwards orders, Michael, but here he comes, Mike Arnold. Now that you're here is not as much fun giving you compliments. I only like giving you compliments behind your back, not straight to your face. But I think you're a strange man who has a great technical analysis pattern. So thank you for that.
A strange man. Okay.
Let's remember the second part. Great technical analysis strategy. And strange isn't bad.
I'm still fixated on a strange man.
Okay. All right, Bobby. Yeah.
Yeah, no, I mean, he knows. If he calls me right now, I can let you hear my ringtone for him.
What is it?
I'd rather it happen. Mike, can you call me real quick?
Oh, put it up. I want to hear it. I'm going to guess it's a Grateful Dead song.
But it's not a Grateful Dead song.
Oh, I was going to think Long Strange Trip.
No, it's not a Grateful Dead.
Oh, that's fantastic.
Fits into the strange man thing.
There's no question. And is that the Twilight Zone or Night Gallery or something? Do you know what that's from?
I don't remember. I think it was Space Odyssey or something like that. It's definitely like astral.
No, I can guarantee you what it is, and I'd be willing to wager on this. What's the one that where they were stuck on the planet with the uncle who screwed everything up and the robot who went like this?
Oh yeah, that might be
Danger
it's
Will
like
Robinson.
Lost in
What's
Space.
that?
Yeah, what is that show
Lost
called?
in Space. is
Lost
what-
in
Yeah,
Space.
Lost in Space.
I would be willing to put $100 on that square that music's from Lost in Space. Anyone who's watching, if you can prove it.
Oh, there it is, Luis. Can you put it on the screen, buddy?
Someone has it? Come
Our
on.
boy Doogie.
Lost in Space.
There
Thank
it
you.
is.
Thank you. God, I'm so glad my mind still works at my advanced age.
It's good
Okay.
shit.
What are we going to cover first? Because there's a lot to cover, and I do want to cover a lot of the names from Unfiltered Investor because, like I said, it's
So
been life-changing.
you tweeted what I consider to be a rule break for you, Jimmy.
Yeah, I did. It is a rule break.
And you
Go
actually
for it.
admitted that you were breaking. Steve didn't say you were breaking your rules. You said I don't do this often. Mike, you know what it was, right?
IBM.
IBM.
Yeah.
And again, for people who are watching, I took a flyer out on a couple call spreads. I mean, I bet probably am wagering less than $1,000 on a potential bounce. If it doesn't happen, that's fine. I just thought a 25% move in a blue blood American company seemed staggering to me, which right now it's going further lower. So the next day of weakness probably would take out my thesis, but here we go. What do you think, Mike?
Luis, can you put the chart up, please? There
We're
it is.
coming into we're not there yet. There's a very key weekly support area lower around 205. We got the 200 week there. You're between the 50 and the 62% harmonic, which is a major bounce zone. But I'm watching for something closer to that 200 to 205 areas, specifically right around 205. And it doesn't just mean buy it there. There is no just buy it. I'm going to be watching to see if we get some kind of at least short-term bounce play. This would not be a buy and hold for me yet unless we trigger a substantial bottoming pattern, which is going to need more than like a little 1 or 2 day bottoming setup. Why? Because now we have broken some major support. If I switch back to the daily chart, there was a pretty key level around this 216.65 area, which that was major resistance back in November 24, turning into support, January 25, turning into support in April, reinforced in May, but we've already sliced through that level, and that was minor compared to this 205 area, which was also the major support and formed a nice double bottom pattern that was tradable back in November of 24. So right in that area, I'm seeing if we get a bounce play. Why is it not an investment for me? Because now we've broken all major forms of resistance, and it's got to do some heavy lifting. If we eventually form like a weekly double bottom pattern, it might turn into a longer term play for me. But initially, everything overhead now is going to be resistance. So like if I go and find a pattern down around 205, if one's formed, my first target would be back around that 214 to 214.50 area. If it did get through there, my next major area of resistance would be 230 to 235, where I'd probably end up unwinding the whole thing with the because the declining rotation zone will come into play. The massively hooking down 50 EMA will just keep dropping. So on a longer term play, those are going to be my targets, but there is no longer term play for me yet at all.
So
by the way,
Yeah.
why I'm interested in 205 area, it could be anywhere from 200 to 205 because the long-term harmonic 62.5 level is 196.89. If we close on a weekly basis below that level, doesn't mean we won't get bounce plays, but the probabilities will have shifted that we will have further long-term unwinding on IBM. So I can keep a relatively decent stop below 196.89. And if that's broken and anything is stopped out, great, because the probabilities have now shifted.
So, Bobby, my question now is to you, and then you get the next question. I can't, I've been doing this for 40 years. I cannot think of an instance where a blue blood American company, like something that's just been around forever and has been a staple, lost 27% of its value in one day and there wasn't even a hiccup felt in the rest of the broader market. Have you seen anything like this before? Or is it crazy?
I mean, I want to say yes, to be honest, but I can't think of one off the top of my head. I don't know about 20% if that's the bar. It seems to me that these moves to the downside are going to be bigger when tech is so overvalued as it is. So it's unlikely that we're going to find one. Maybe Mike knows of one. Maybe he's looking for one right now, but I can't think of one that was like exactly 20%. I know there's been companies that have dropped like this before. I don't know if this dropped for a good reason, but a lot of the times when things are going up for a hollow reason, these kinds of things happen. If you look at the chart Mike still has up, it was a steady grind up to the level it's at right now, right? And some might say it was a little bit overdone. It just kind of came back to where we were at the end of last year, which may not be that bad of a valuation for IBM. Honestly, I'm not sure.
Right. So the story is, and again, you and I know the story just matters very little.
Of course.
But the story is that when he came out, Arvind is his first name, the CEO, I can't remember his last name, but he basically, what he said made people think that they were losing the AI race and that they were going to be eliminated from contention in that said race. I think, the reason I bought some call spreads is because pendulums, man, you know what I mean? That's all I have to say. Pendulums. Right. So, yeah. Anyway, what do you want to move to?
I'd like to move to AMD if Mike wants to.
Yeah. I own it.
I own it too. And that's part of the reason. Like, I mean, it's obviously pretty parabolic and it wouldn't bother. I shouldn't say it wouldn't bother me. It wouldn't surprise me if we dropped all the way down to the 21 there, which, by the way, for everybody watching is the blue line. Also, for everybody watching, if you have any stocks you want us to look at, put them in the comments.
Oh, yeah.
Widge has probably already posted the YouTube link if you're not watching on X. Or you can go to X and find us, and Widge has probably copied us on the YouTube link. I'll repost that too. Mike, what do you think of that?
I think personally, I think it's putting in a longer term topping pattern like a lot of the stocks in the AI trade. It's got a lot of volatility. It's forming a rounding topping pattern. It's getting sold on rallies pretty substantially. It's insanely overvalued from a fundamental standpoint, and it's still way overextended from its monthly rotation zone.
Wow.
So, like for me personally, I'm looking for lots of topping patterns in AI stuff from a longer term position. Yes, they're still tradable. Like there was a little mini double bottom in NVIDIA that hit all the targets. However, from a long term hold, there's nothing here in a lot of these stocks for me anymore. They've outlived their usefulness. We are still very overextended on a monthly basis. Now that means they can sideways correct. I mean, what's they're trailing? They're 190 times trailing PE. I don't have the forward PE in front of me, but a lot of stuff, even on good news like Micron, had really good guidance, really good earnings report, and been getting sold off. SanDisk, another one that's starting to get selling pressure. NVIDIA, it came down to its 200-day and bounced with a really nice pattern. That's what I'm saying. There were still trades, but from long-term stuff, I am not interested in any of these things from long-term.
That chart is the definition of mania, isn't it?
It's way, it stays way overextended. And I just know where trailing stops for long-term holds, where your trailing stop level is. And if you don't have a trailing stop, you might want to come up with one. Yes, we'll get bounces like we're bouncing off the top of the weekly rotation zone. At some point, I expect us to dip into the rotation zone. There will be buy patterns. There will be pretty decent bounces in it, but those will, unless something substantially changes with the chart patterns, those will be bounce plays only.
Before I put this follow-up out there, Jimmy, have you noticed that you have a food shirt on because you have your restaurant on the top chest corner there, whatever side that is? Mike has a concert shirt on, or at least a band shirt. And I have a shirt that's a combination of a band and a food.
That's fantastic. That's a great observation, Bobby.
That is, we are smart.
Jose, can you kill Bobby's mic?
We are smart people here. Real quick, Mike, can you put up Meta and go back to February of 2022? Just drag back to Feb of 2022. Now, Jimmy, I don't know if you would call this a blue blood company. 22, Mike, 2022.
2022.
Yeah.
In February is right here.
Okay.
End of January.
Would I call it a blue blood company? The answer to that is I get your point, but I'd probably say no, because we always know that there's more built-in sort of, I guess IBM's tech as well. I don't know. I don't know the answer.
I'm seeing Thursday, February 3rd of 2022, 26.39% drops. That might right
that exact day.
That's that gap.
Gap right there. I'm sorry. You go back. Maybe I have the wrong date.
Wait. February.
Right there.
Right there.
Yeah. February of 2022. It's February 3rd. That's a 20 some odd percent. What is it, Mike? 22?
Let's just see. Close to you want close to close or close to open?
Sure. Close to close.
Close to opens rough 24.26. Close to close is 26.
Was there anything broader going on, or was that just a story about Facebook?
That was they missed on earnings, and they had already, there was stuff with the metaverse that was starting to unravel and everything else, and then they just announced. That's where you'll get bounces in these things, and this is why, yes, I'll be watching for potential bounce plays in IBM, but IBM could still see a fair amount of downside, because let me put up, this is actually a good study.
So while you're putting that up, obviously this is not IBM, and I could understand pushback about calling Meta blue blood. I think you wouldn't necessarily call Meta blue blood. It wasn't a public company for very long at that point, right? In 2022, you could argue it's still.
Well, it went public in 2012.
Yeah, I mean, you could argue
it's not IBM, young. Is what he's saying. Yeah,
right.
No,
It's
not
IBM.
It's not got the longevity of IBM, but you know.
Yeah,
a lot of these.
But I mean, I'm just saying, after that move, look how much farther down it went. Go ahead, Mike. I mean, we're going to point to the same thing.
By the way, that bounce would make me money in my IBM calls, though.
What's that?
That bounce, if it bounces like that, that would make me money, and I've given it like 6 weeks, less than 6 weeks. Yeah.
Now, but you also, again, we don't know how yours is going to play out yet. You're going to have to still recover from the drawdown and the time factor. So this. We had the big gap down, then it followed through. Remember, I talked about the 62.5 being a critical tipping point. Followed through, so that means further downside ahead. Probability, not guaranteed, but it's over 70-something% that there's further downside ahead when that happens. And there were bounce plays, but they didn't even get back to that sell-off gap or the initial little support level. So, and then there's long-term. Look at this one. I forget what happened here. November.
Oh, another crack. Jeez.
That was another huge miss. But then we finally got the bottom. But look at that bleed out there. And then you can watch for signs. I mean, there'll be signs like after that other one, it was finally a % B buy that then based and finally started to build a stronger base. And then went on its massive run. But these things can take some time to initially recover, and that's why I like to watch for the longer term patterns, at least a weekly and if not monthly % B buy pattern after these things have bled out, and those are generally the best ones to watch for, or weekly double bottoms.
I like it. I like it a lot.
I mean, the reality is you did it in options, doesn't really matter, but it's just a good case study for people, because a lot of people do what you called a rule break of your own way of doing things.
Yeah. Flyer.
Yeah.
So, I mean, you called up that, but I just want to play. We were back on the AI stuff. This is just what I'm watching for, and we will get bounces. There was a potential little mini double bottom in Micron that never traded, and now this is it's not yet triggered, but it's confirmed a head and shoulders top. So right against the 50 EMA. If we take this out, yes, there'll still be bounces, but the probability shift, we could come back down between that 50 and 62.5 with the rising 200-day, and over the next few months, we could easily see a return and nearly cut this thing another 40% potentially.
Oh, so hold it, Michael. So we settled today below the 50, correct?
We settled right at the 50.
Right at the 50. So you're talking about weakness tomorrow, maybe close the week below it, and then it looks like the door's open for further losses, correct?
Then what I would personally do is watch for bounce plays to establish short position. I wouldn't just, especially if I was using options, I'd be looking for bounce plays and then roll over. So I watch for the separating rotation zone and watch for bounce plays to establish short positions.
So I got, as you guys know, because we talked about it, I got at 30% of my micron near those at a good level. But that still means I have 70% on. So I'm still kind of, I need to know what to do with that, because it was got to be an uncomfortably big position, not by virtue of the fact that it was big when I started it. It just grew ridiculously.
Mike, is that a head and shoulders top, or is it too ugly to be that?
I switched to SanDisk.
Yeah, is that a head and shoulders
SanDisk is a modified one. I'm still bearish. SanDisk is now closed a couple times below the 50. The only thing that makes me bullish in the short term on SanDisk is if we get a close above 1952. Then I will look for the bounce play in it. But overall, we're getting deterioration on a lot of these AI stocks. And interesting enough, rotation back into things like the Mag 7. But either way, the mega cap breadth, whether it's AI or now back to the Mag 7, the breadth is staying very narrow in this market. Doesn't mean I'm bearish on the market yet. I'm not that bullish on the NASDAQ. I'm more range bound on that. I'm still minorly bullish on the S&P. I think we may eke out slightly new highs on a cap weighted basis, not the equal weight S&P, but the cap weight. Overall, though, I'm watching for later in the year more substantial topping patterns and potential breakdown plays, because the breadth is staying too narrow. It's just shifting. It's shifting narrow focus. It's going from one narrow focus to another one. Back to the Mag 7 narrow focus.
It's interesting. What do you got now, Bob?
Gold, please.
Gold. Jerry. Okay, I'm going to add something before Mike starts talking, is that the 4,000 level is obviously something. We talk about psychological levels. They're really not psychological levels. They're levels that a crap ton of option open interest exists at. And 4,000, I haven't even checked it, but I'd be willing to bet my eye teeth that there's a lot of open interest at 4,000. So 4,000 matters, and it matters a lot. Michael, what do you think?
Unless we get back above the weekly rotation zone, I'm erring on the short side still in gold.
What's that level?
What's the level that we need to regain? Roughly 4,400.
Okay, yeah. So it's not completely.
So I will trade bounce plays. I will definitely trade bounce plays. And we're trying to get some consolidation down here. There's been bounce plays. There's a little mini double bottom that was tradable and hit the first and second target. If we bounce back above roughly about 41.50, we could easily see a run to 42.20. But here's the problem with establishing long-term plays in this area right now. There is a ton of overhead resistance, and every time we bounce into it, it gets sold. So personally, if I was turning things into a longer-term play, we'd have to regain 4,400, and the 200 is right overhead of that. But I just don't know when we'll regain that. And then I'd start watching for pullback plays to potentially get long. Other than that, I'll do short-term plays to the upside, but long-term, I've been out of stuff since we got below 4,400 and just being very patient.
I wish I had done the same. Anyway,
I mean,
let's
theoretically, the size of this topping pattern, theoretically, 3,500. If this 4,000 area is broken with volume, then we could easily return to 3,500 quickly.
Well, this is funny because I've been saying what I fully believe is that the base is 4,000 now, and I know the technicals don't back that up, but I believe psychologically the base is that. But if the Fed really does tighten, I think the base becomes 3,500 quickly. I think the Fed's not going to tighten, and I think we're just going to do that thing where we keep pushing them out. But that's what it seems like to me. But let's take a quick time out. Luis, will you put the banner up? This is the part of the show where I ask a favor from you guys who are watching, and I totally appreciate all you guys do for us. One more little tiny thing. Please scan that QR code and try Tradier's what's it called again? Tradier Pro, right? Tradier Pro options trading platform. Sorry, guys, I'm not a journalist. Tradier Pro's options trading platform. We talk to people who've been trading options for decades and some for days, and they say the same thing. That's the gold standard. Well, actually, that shouldn't be the gold standard right now because gold is falling through the floor. So whatever standard is better than a gold standard is Tradier Pro. So please, guys, give it a try for 3 months for free. Thank you, and back to the show.
Sophie Cunningham just announced her basketball youth camp. You think you could be a youth camp person?
Yeah, I think so too. I have a huge crush on her myself. She's
Oh,
six.
I want to learn how to play better basketball.
Oh, that's it, huh? That's it, right? Okay, yeah.
So,
she's 6'4". I love that. Yeah, but anyway, go on.
Mike, do you want to say more about gold? Otherwise, somebody on Twitter asked about a stock.
No, we can go.
Warner Brothers Discovery. Basically, he said that he's holding on to his last 100. This is Ivan Snoopy 32.
Oh no, I talked to him a lot. Yeah.
Snoopy.
I mean, there's no real analysis I can do on this because it's whether the merger goes through or gets broken up.
Okay, so there's no technical thing you can do with this.
I mean, because that's why it's pinned. It's pinned to this very close, tight range.
Gotcha.
Now, if this falls apart, you're going to see it probably plummet pretty quickly. If it goes through, it's going to go through at the merger price.
Okay.
So it's just upside. I mean, you're going to get rolled into the combined company. To down, there's just risk to the downside. I mean, your 100 shares is not much. So,
all right. So that was anticlimactic. Then let me give you one that we're still long in the newsletter, which is Amgen.
What do they do again? Medical?
What's
Amgen
that?
is medical, right?
Yeah.
Yeah.
Yeah, Amgen. I mean, long term, as I wrote about a couple of weeks ago in Unfiltered Investor, I think there's going to be a bigger rotation into healthcare stocks over the next few months. Again, this is a longer term thing, not you're going to get ups and downs. I mean, you can see how Amgen trades, but over the next few months, we should see a longer term rotation into the healthcare area. This is the healthcare week. We get the weekly chart of the ratio between XLV and SPY. So on a longer term basis, here's the monthly chart coming back down, and this is going back all the way to .com at levels a couple last month that weren't traded since the .com area. Is it just a buy because it was the .com area? No, but you see the ratio has come all the way back down to a very key support area. That's why I'm looking. We triggered a monthly ratio trade, %B buy. If you look at the weekly, we've had a declining trend line, and we've bounced back to that in the weekly 50 and a key resistance level that it didn't quite get to. Not surprised to see a pullback right now in the ratio between healthcare and the spiders, but going to be watching for the next rotation back up. So this, again, long term. Also long term, when we get the next rotation in the healthcare, we could easily be making a run for many months, potentially to a ratio of 0.27 over the next few months. So
even in a great financial crisis, this ratio didn't get as low as it is now.
Yeah, and I'll call that up too. If you look at the financial crisis, didn't get as low, but it got down to, here's April 08. Then it went on a multi-month tear. When this thing shifts, it can tend to go on a pretty long-term spree. That's why I'm watching.
Just to be clear, Mike, means healthcare and by default defensive outperformance to a certain degree, right?
Correct. It has to outperform. They can both go down, but healthcare might not go down as fast. But that's where I'll look at that sector though and find the best looking stocks with the best looking patterns, because there's a defensive shift, and you'll still get, even if both are going down, you'll still get great bounce plays in them. So they're very tradable plays. So this is going to be a sector I'm going to be watching for the next few months, especially if we're putting in that top in technology, in AI. We could definitely be seeing a outperformance. And healthcare is normally what, Bob? A defensive sector, right?
Yep.
So it's been beat up severely. It's underperformed. But if we're starting to get that shift, it's something to keep your eye on over the next few months, because once it starts moving, it moves.
Love it. That's why, again, I got into XLV when you said the technicals favored it back 5 weeks ago, and I plan on keeping it. So I've hedged it now against that trend line. I didn't notice the trend line. I just hedged it when it shot up to those highs, which seemed far fast. But I plan on keeping it as an investment and just right now hedging around it until it breaks through and starts to move in earnest.
Right. And XLV had a double bottom pattern, and that's what we put out. Went to all the targets and beyond. Now it's pulled back to the final target on the double bottom pattern, but back to the weekly, we could still see a pullback even to 153, 152 area, but we're starting to get that building of the base. We're starting to get the higher lows. We came up, made higher highs. So this is what I'm looking for. And this can just keep outperforming, especially on the rotation on days. Watch the days when we start getting selling of AI that doesn't rotate into the Mag 7. Look what healthcare does.
Interesting. What now, Bob?
I want to address a comment from Doogie. And Doogie, if I'm misinterpreting what you're asking here or saying, please clarify. Doogie says it seems like the news would trump the technical analysis, no pun intended. So I'm going to give you my take on this. Jim, if you want to add something, then I want Mike to chime in, because obviously this is his expertise. I've always looked at technical analysis as the steering wheel and the news as the gas pedal. Okay. He says this was regarding Warner Brothers Discovery. Okay. So maybe I don't have to go into this, but I'm going to go into it anyway, because a lot of people like Scott Nation, so I always bring that up. He always would say things like, oh, technical analysis is just a lot of lines and squiggles. I actually have come to the realization, I think almost every single part of analysis is technical, because even people who look at whether a stock is expensive or cheap, whether you're looking at their relative earnings, or whether you're looking at their valuation, or all of that stuff is numbers and therefore technical. Whether they're looking at what the estimate of their next month's earnings are, again, math, old earnings, new earnings, numbers, technical. And technical analysis to me, again, is the steering wheel, and then outright news is the gas pedal. And you're just trying to get yourself pointed in the right direction. When you're looking at charts, you're looking at what the mob is pointing to. And most market moves are mob rule, even if they go against what your chart is telling you. It's a shock by the mob that they think now their view is wrong and they're going in the other direction. News is unpredictable. Even the announcement of news is unpredictable. Okay, if President Trump tweets something, right? It wasn't on the economic calendar. There's no way you can predict it. All three of us were involved in the markets on various trading floors, Jimmy and I at the CME, and Mike probably at the SIBO when this happened. But do you remember the surprise 50 basis point rate hike that happened in, I think that was early 90s?
Sure.
It wasn't on the schedule. It was intra-meeting.
Yeah.
And I remember being at lunch and I got a phone call, get up here,
right,
screaming at me to get on the desk. And, these news events happen, and they just happen. And when you back test or do Monte Carlo simulations or whatever you want to do to your technical analysis setups, all of that's in the information. All of that's in there. So you're looking for things that also work when that kind of thing happens. And working may just be, I got stopped out at a decent level. That actually could be working. Go ahead.
Well, I'll add too that when Donald Trump became president 2.0, there was a feel that he was going to be a headline bomb in just about everything, and that's just a world we have to get used to. You know what I mean?
You wrote about that in our newsletter, Jim.
I wrote about it in the newsletter. Yeah, so you guys know, most of you guys read the newsletter who are watching. Yeah.
And again, on the data, let's separate mergers and acquisitions from news, because a merger and acquisition is a financial. Yes, going to make news, but once a merger acquisition is pending, the only news that's going to affect it is whether it's going to go through or break up. That's why technical analysis is sort of useless, because it's going to get pinned right near the acquisition price.
It's a binary. But to Doogie's point, Trump could come out and say, no, this is an antitrust issue, which is stupid. Remember, the previous government
again, there's either going to be the go through or the breakup. That's why I'm saying that.
Oh yeah, right. Okay, so that would be not go through.
The last day-to-day news on Warner Brothers is not going to matter now.
Yeah.
Separate from that, you're going to have news that's going to, yes, things react day to day, but it sets up patterns.
Right.
Okay.
I'm with you.
And that's where the technical analysis comes in. Like things that Trump mentions, like Intel, like Dell. All right. There's also key patterns. Day to day, can you get pops? It's generally pops based off what Trump says. But longer term, what are the patterns? For example, I have Intel on the screen now, which is
why does everyone else calls it Intel and you call it Intel? Are you from the South?
You know what? I just don't want to be normal.
I know you don't. Okay, let's look at Intel. Yeah.
Intel, INTC.
Okay.
Right back to a major support level from June. If we start breaking below the weekly rotation zone, we can be into a clear path move, and we could see without too much support a potential move back to 80. Now, we've not broken that level. We're right there. We might have a weekly percent B buy setup for a bounce in Intel. Hey, look, there could be a weekly setup. Trump could come out next week and say, Intel's the greatest. We want 50% more of Intel. They're going to give it to us. Could it trigger the percent B buy, which is a technical setup? Could we get a bounce play in it? Yes. So the back to your point, Bob, it's the gas that could trigger a potential technical setup. The setup's not there because Trump could come out or not come out and say anything. It's just a pure technical setup. And whether it's triggered by Trump saying anything, or whether it's just triggered because it's holding support and you get another short-term rotation back into the AI play, it doesn't matter to me, because I didn't back test this knowing what people said or what the Trump factor was, or knowing when companies came out. The setup's a setup. It's either going to trigger or not. And it doesn't matter if it's on news, doesn't matter if it's just a rotation due to the stock market.
And by the way, I will also say that technical analysis kind of leads you to be able to interpret how the stock will move based on a headline. The same headline doesn't affect an asset the same way every time. Market positioning, momentum, and sentiment are huge deals to that. Sometimes Trump will say something that should be bullish for something. I don't remember specific instances of this, but it's possible that it breaks down from it. Buy the rumor, sell the fact kind of thing. Anyway.
And people say it's where people are shocked, like Micron. We talked about earlier. Blowout earnings, insane forward guidance, which I think was to their detriment because it was a little too insane. But it gapped up, and that's been the short-term top. And now it's set up a significant pattern. So that's news that also didn't do what people thought it was going to do and keep propelling it higher. Why? Also because on a technical level, here's your Micron monthly chart. Oh, I mean, it got a little too far ahead of itself. And
that's why I sold it out. Yeah.
And so you had news, but you already had potential technical setups that are defining what could happen in the stock. And as I said before, there could be Micron could have a weekly percent B buy signal next week. We don't know yet, but there's a potential setup. Well, I don't know what will trigger that, whether it's news, whether Trump tweets or says something about Micron. Who knows? it's the setup there.
Bobby, what next?
Core weave, please. I want to put up Widge's comment while Mike's calling that up. Widge says, I just like drawing and using the lines because they give me a frame of reference for my own use. That's really technical analysis in a nutshell. It's a frame of reference for when you want to enter something or whether or not you should enter something. And the same thing for, although I think it's, to me, targets, and this is my point, I'm not putting this on either guy, targets is like a civil suit and stops is like a criminal suit. Like stops, I want to be there to be a, what is it? No, that's a no shadow of a doubt.
Beyond the reasonable doubt.
Yeah, beyond reasonable doubt that's where my stop should be. Targets, I just want to be a preponderance of the evidence.
So you knew that one. Good, nice. Yeah.
Because I want the targets to be hit.
Right.
Yeah. Go ahead, Mike.
Core weave is another one on, besides short-term bounce plays, not interested.
That does nothing. Those lows that it's coming into, which seems significant, that means nothing to you?
If we get a setup with a short-term bounce play, it's tradable. From a long-term investment, we got back in the 50 to 62.5 rollover zone, and it's rolled over. There will be bounce plays. There might be a bounce play tomorrow. Technically, there's a % B buy setup. There could be next week a % B buy setup on a weekly basis.
Oh, can you explain to the people what a % B setup is?
It's giving away it's a Bollinger Band % B chart pattern. Length of 5, source is high, low, close divided by 3. So you're taking the high, low, and close, dividing it by 3. Standard deviation of 1. It's this red set in the middle. Let me expand it a bit. When it drops below 0, you then watch the next bar's high. If the high is taken out, you can enter. You can only hold if it closes above there. And then there's technical targets, which are too much to explain right now. But if it gets down, like here was a % B buy trigger for a bounce play back in March. And, you got a little bounce. We could get bounce plays in here. There was a little double bottom play back in here. But these are short-term plays. There's lots of things can be played short-term, but are they a long-term investment at this point? And core weave is back below a critical level. Coming into a bounce zone, yes, but core weave, we could still see further unwinding. I would not be surprised over the next few months to see core weave back down to $50.
Okay. It
won't go there in a straight line. There will be bounce plays, but you got to know your time frame because something, for example, I mentioned NVIDIA. NVIDIA had this little, let me take off the longer term play, right off the 200. This was the bounce play we were looking at.
A double bottom, right?
The double bottom, which reached its full potential. Could it keep bouncing a little more? Yeah. But it's got to, for this to even turn into a potential even medium-term holds, got to keep rallying above 219. Other than that, this is just a key little short-term play off of a very significant level. Is it turning into a long-term play? Not necessarily. It could be trailed right now. But if it does not close above 219, and the trailing stock gets taken out, it's done.
Can we look at Google?
Yep.
But Google's, for you guys watching, Google's bounce today was because of Warren Buffett said something about Google positively, correct?
I don't know. The only thing I saw with Warren Buffett is he said it was hard to buy any stocks right now. I don't know, Mike, if you saw Doogie's comment, you have the right to remain solvent. I thought that was funny.
Yeah, that was funny. Thank you. Thank you for that, Doogie.
All right. Was there other news in Google, Jim, that I missed?
Yeah, no, I think it was Warren Buffett said that he regrets not buying more of it, something to that effect. People who are watching maybe know more, but I think that's what he said.
Well, this gets back to my comment, though. We've had a rotation back into the Mag 7 recently.
Yeah.
I put up Mags first. Why?
Right.
Because here's your bounce in Mags. It's not just Google today. You got a nice little return to the 50 in Microsoft. Apple, I'm trying to separate because look at Apple today.
Wow, that was a good one.
All right. So it's not just you had a strong rotation into a lot of the Mag 7. So Google is just part of it.
Right.
And here's your Google. The Google has sort of reversed. It's got an inverse head and shoulders right now, which is on the verge from a modified flat neckline, nearly triggering. Also, if you're just using the traditional downward sloping, it's confirmed. I just have to double check something on this one because I didn't revise to see if the targets still work. Let me just double check before. I don't want to give out incorrect information. So yeah, no, the targets don't actually still technically work. So I'll still watch this area, but the targets I would use, if this Google's still got to follow through and close above 379.21. If it closes above there, the targets become 389.01 and 398.81. So could we see a return to those two levels? Yes, we could. That's why I'm keeping a close eye, but it's technically not going to be an inverse head and shoulders, or at least one I can't use the inverse head and shoulders patterns on. So we could see a return, and what I'm going to be watching for is seeing if this sets up a longer term potential double top pattern going into September. But I'm looking definitely for the bounce in Google.
Okay, that makes perfect sense to me.
I want to put up, Luis, if you can see it, Remo's comment. It's stock charts. I use 3 pillars: technical, fundamental, and sentiment analysis. Trends, I don't know what you mean by the rest of it, Remo. Trend, intrinsic value, and mood. Which are the 3 pillars? I maybe guess technical is trend, fundamental is intrinsic value. No, fundamental and sentiment would be mood.
Yeah, so I think that sentiment is the same as technical. Doesn't a chart?
To me, it is.
Remo,
to me, it is.
That's what I think. Yeah.
To me, it's
and intrinsic value again is part of what you're saying. The 3 pillars, the fundamental, intrinsic value would be part of the fundamental analysis, obviously. So you just threw those in at the end. But I get what you're saying, Remo. Except I will just say I think sentiment is maybe there's a different element to sentiment. Maybe we're talking about something that doesn't show up on the chart that's like being broadcast in the media and the narrative. Maybe there's a little different. Like the sentiment.
Knowing Remo, he's probably got something. Maybe it's proprietary. Remo, you don't need to talk about anything that's proprietary. But when I look at people, they're like, well, I looked at sentiment indicators from Bank of America. It's like, that's technical.
Yeah.
There's like a formula that gives you a number at the end of it. That's technical.
Right.
I like to look at earnings and see what the revenues are. Technical. It's a number.
Right. And exactly. But I mean, when I think most people think of it as the lines on the chart patterns that can be replicated.
They're not wrong about
and we're trying to defend technical analysis, which I like defending technical analysis, so I'm fine with it. Yeah. What else? Are we done?
Yeah, I think so. Unless there's anything else, you guys, should we do a broader index? We didn't do a broader index, but I'm not sure it's going to look much different than the MAGS chart.
No, I don't think it is. The NASDAQ is obviously bouncing along. It's 50. And
let's look at the Russell. How about the Russell?
Looking good.
Also, it's the least interesting from my perspective.
I picked the least interesting.
Yeah, because it's in the same consolidation level it's been in since the middle of June. It's getting sold on rallies, bought on dips.
Then let's look at the NASDAQ real quick, because the NASDAQ
is funny because I have
the second at least one I'm interested in.
For the CME, the Russell was my commentary today, and I started it out with consolidation continues.
Yeah. So. The NASDAQ consolidation, we're trading pretty much at the same closing price we did on May 14th. It's gone up. It's gone down. It's trying to put in a diamond topping pattern, getting sold up on rallies, getting bought on dips, getting in a tighter range. The most interesting ones to me are the ones you didn't list. The S&P, which is now putting in a multi-top. Would not be surprised, though, to see it break and set new highs. This one I'm really keeping an eye on because as opposed to the Russell and the NASDAQ, which still could break out, but they haven't haven't had enough strength to do that yet. The S&P keeps stair-stepping higher and keeps testing this very key resistance. If it can get above 76.26, which is a critical level, and if it breaks above their intraday, watch that it follows through, because that follow-through close above that could ignite the final leg up in the S&P. And we could target, I just revised the targets. This thing on a breakout could hit 7,700 and then possibly 7,790 on the next breakout. The Dow is also, yes, it's been in consolidation, but it's trying to build a base higher, has been holding up even with the rotation into the mags. And I'm going to be watching for this to go up and retest the most recent highs. But if I had to pick out of the NASDAQ, the S&P, the Dow, and the Russell, which one to, I'm betting on new highs right now.
S&P. Yeah, I think so too. And I think that's a novel in two charts, the NASDAQ and the S&P. This is encapsulating the rotation. And the rotation is happening. It's broadening out.
Yeah. We've gone from narrow being the AI play, to narrow being back to the mags play, because if you compare, here's your spiders, which mimics the ES we just looked at, basing, getting poised for a breakout. But if you look at the equal weight, here's your equal weight. That broke out earlier, but now look at this. It's trying to barely hold on to a wedge pattern. We're getting the rotation back out into a narrow thing of the mags. And this has been pulling back where the spiders are coiling for a breakout. And if we look at the spider RSP, which is the equal weight ratio, you've definitely seen how it's stair-stepping higher back into a very key area right now, which I am looking for. Let me re-anchor this, and then we can wrap it up if you're ready. Now, two things here. I'm watching to see over the next few days, especially next week, where we get more tech coming in, if this ratio can close above 3.57. If it can, we could continue seeing a narrow market cap rally for the time being. The bigger pattern I'm watching, as long as it's not invalidated, and so far this bounce is not invalidated, even on a return to that 3.57 area, it would not invalidate it. Longer term, I'm keeping an eye on this ratio for a very specific reason, because if this turns around and starts breaking down again, and we start favoring not cap weighted, whether we start favoring more of an equal weight portfolio, and we trigger this massive double top pattern, that could be a shift that lasts many months. So those are the two things, what I'm watching the short term, and then potentially the bigger term pattern that will help determine whether we stay narrowly focused or whether the narrow focus is going to have to broaden out. And that broadening out could be with both things going down, just the equal weight not going down as fast as the cap weight.
Okay. By the way, any kind of preview of what the trades are going to be in this week's Unfiltered Investor? Not that we'll go over anything.
No,
just any names.
We won't know. I run the model on Thursday night.
Yeah. Okay. So, and by the way, when the newsletter comes out, guys, it is actionable trades in these things, and the results so far have been fairly astounding. So again, you can get that's normal. You can get the 2 weeks for free, right?
It's 2 weeks for $1.
$1, yeah, $1. So yeah,
gotta do $1.
Free. Yeah, but if you guys want to try that and see it for a couple weeks, I think you will be amazed at the success rate that this stuff has, because there's thousands that don't make the cut. You know what I mean? Right. And then all of a sudden, the ones that do make the cut and check every box of the system for Unfiltered Investor, it's been amazing so far.
Look, the model I run, and this is not including what Mike does. Okay, I run two models. It looks at 6,700 stocks.
Right. Yeah.
I run the model and I walk away. I come back like 20 minutes later to see what it's kicked out. So.
Right. So it's amazing to me. But thank you guys so much for joining us. We are Jim Iuorio, Bob Iaccino, Mike Arnold. We are the three at unfilteredinvestor.com. Thank you so much for Trade Ear. Trade Ear Hub is the best. please try that Trader Air Pro as well. And thank you guys for joining us on the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.